This is King World News. I'm Eric King, and you're about to hear our exclusive weekly metals wrap with Ted Butler. Remember to go to our homepage at www.kingworldnews.com for more interviews. With this week, we also have Bob Prechter from Elliott Wave International, author of Conquer the Crash, as well as John Malden, the popular author of the weekly Thoughts from the Frontline and Outside the Box. Joining us now is Ted Butler. Ted, interesting action in the metals this week. We had a kind of a mixed reaction. I think gold was up 20-some-odd dollars this week. Silver was down slightly. What about today's action in the metals? What did you make of that? We had the big gap down in gold and silver, and then it just kind of recovered all day.
Hey, Eric. Yeah, this was a day for volatility. It's one of the more volatile days that I recall in the metals. At one point, I think silver was down as much as $1.30, and gold was down about $50, and as you indicated, they came roaring back, not all the way, but impressively off the bottom. What I'd conclude from it is basically the volatility tends to beget more volatility, and at this point, we didn't really resolve anything as far as the structure in the market today, in spite of the volatility. I would say that nothing would surprise me at this point with silver. If the explosion took hold and all the bullish factors kicked in and the bad guys, the short guys, ran into trouble, it wouldn't surprise me to see this thing run to $30 or more in a literal heartbeat. On the other hand, if they are able to engineer some kind of a sell-off and get liquidation, which is their aim, a drop of $2 or $3 wouldn't surprise me either. So we've got some interesting times ahead, and I think that today's action may portend further volatility in the immediate future.
What did you make, Ted, of the situation in Dubai? That was the excuse for having the markets down today. And obviously, if there's tremendous losses there on the bank side, there's another hiccup, right, in the global credit crisis and everything else. So that was the reason everything was down today. What was your take on that?
From what I've been reading, I'm kind of surprised that there was so much of a surprise about Dubai, as I've been reading for more than a year the pending real estate problem that they've had there. They've overbuilt in a tremendous way, both on a commercial and residential basis, and there's see-through buildings, unoccupied buildings everywhere. I kind of remember over going back in the beginning of the year how reading reports that the unemployment situation and the economy was cooling off so much there that expatriates were actually leaving the country in droves, driving to the airport, abandoning their cars at the airport, and just beating it out of Dodge. So sooner or later, that has to be recognized, and I think we just came to that recognition in the last couple of days of a situation that had long been brewing. I kind of see some similarities and a lesson maybe to be learned from what's taken place in Dubai with silver.
What are the lessons for silver then?
Well, I think it goes back to that a situation can exist and be well known and easy to document, easy to study and learn firsthand, and yet it becomes overlooked in spite of that. And while the information and the facts are one thing, the recognition of those facts are not widely dispersed, or people don't act on it. And I think that's the case in silver. I think the facts are very clear in silver, how bullish the whole market is and how it's going to eventually and inevitably end up much higher for reasons that can be discerned and studied today, yet so few people have looked at it that, kind of like Dubai, I don't know what the specific event that's going to trigger it. We're going to wake up one day and say, oh my God, look at silver, and why is this going on? And it's going to be a big surprise to a lot of people, but to the people who've taken the time to study the situation and position themselves correctly, it's going to be more of a case of where was everybody? Why wasn't this recognized before? This was easy as pie to discover. So I think that's the connection I would see.
Let's talk a little bit today, since we normally cover the commitment of traders. There isn't one out today, right, Ted? So let's cover the bullish factors for silver that you see.
Well, just in a broad brush approach, the first thing that you'd look at is just to identify it as the material that it is, namely, and we can use the words of the Commodity Commission here, and it's in the category of being a commodity of finite supply. There's not an infinite amount of it that can be created. like any other commodity, physical commodity. So we have a commodity in silver that is generally in limited supply. We know that world inventories over the last half century have been depleted by as much as 95%. It's been total depletion and destruction of existing inventory, so we have a very small inventory base to work with. In addition to that, while we do take out of the ground 650 or more million ounces of silver each year, and we recycle a couple of hundred more, these millions of ounces, hundreds of millions of ounces of silver that we do take out of the ground and produce are basically spoken for. So by the time you're done with your industrial consumption and various forms of fabrication, you don't have that much left over. If you do have a surplus of production over current consumption right now, it's not a giant amount. And then when you add that